Can we sell the fund properties out of our own inventory? There probably isn't any question that people ask me more often than this. This isn't one of the kinds of questions, though, where people write in secretly or anonymously. People actually call and they ask me if they can do this. And the answer is always yes. You can do anything that you let your investors know about and that you properly disclose and let them in on. But let me promise you, of all the things that you can do, of all the ideas that people come up with, this one's about the worst. It's probably the worst idea you can come up with to sell something to the fund that you're struggling with in your own inventory. People don't trade it into their inventory because it's an awesome property that they want to keep holding on to for themselves. The reason they trade it out of their inventory is because it's a dog. They can't find anybody else to buy it or to take it, and so they just try to take it into their own fund. And basically, it's like a hot potato situation where they pass the buck to somebody else. It's the worst idea, and here's why. You can't make a business out of giving your investors terrible deals. If it was terrible in your hands, it's going to be terrible in the hands of the fund. Now, if you want to transfer, there's two ways that this happens. One is it's a dog and somebody just really wants to get rid of something. Or second, they have a property where they have a lot of built-up equity and they want to release the equity and take the cash out by putting it into the fund. So they're going to continue to own it, get all the cash out, and now continue to own some of it with more upside. Either way, I find it objectionable, and here's why. If it's a dog, it's obvious that if it's bad for you, it's bad for the investors. Don't do it. No matter what, you have to disclose everything about the transaction, what you paid for it, when you bought it, what improvements have been made, how much it cost to service, everything that's in it, so you know exactly to the day and to the dollar exactly where you're at. So the investors have to know that if you bought them for $1 million, you put another $500,000 in, you're in it for $1.5 million. If you want to transfer it in at $1.5 million because you think it's a good property, that's fine. But if you're going to transfer it in at $1.5 million and it probably has a market value of less, it's a bad idea. Don't do that. Now, there have been other situations where people have great properties and they want to transfer them in and they want to take cash off the table, but they want to continue to participate in that property, so they keep it in their fund that they control. Again, probably a bad idea. Investors don't want money going into a situation that's not productive, that's not going to add value to the transaction. So if you take a property where you bought it for $1 million, you put $500,000 in, you're in $1.5 million now, and you're going to take some profit off the table using funds from the deal, that means that the investors invested money that's not going to be used productively to add value to the transaction because you've taken that money off the table. So if you want to sell it to a third party. I wouldn't sell it to your investors in the way that we're talking about, where you transfer it out of your inventory and into your fund. It's bad business. It's bad karma. It just doesn't ever seem to work out the way that you think. And investors end up not being happy about it. So if you want to have long-time relationships with investors and with other people, operate in a little bit more clean way. You have to be transparent. You have to show everything anyway. There's no secrets. There's no surprises. So for the most part, it's something I just don't recommend. This is a great business. Now go out and stake your claim.